Ladies and gentlemen, good afternoon from Athens. I am Alex Benos, the CFO of Cenergy Holdings, and I'd like to welcome you to today's live webcast on our company's 2025 Q1 financial results. Allow me to share some data that will help our presentation. Here we are. Give me a couple of seconds. Great. So I believe that everyone can see the presentation. Of course, this presentation will also be available on our website after the end of that teleconference. So without further ado, let's see what are the main points on this first quarter 2025. First of all, this has been a very good quarter, a very good start for the year, and it sets a positive tone for both segments, as we have achieved, as you will see, double-digit growth both in the top line and in the operational profitability. So I start with the revenue numbers. The revenue reached almost 490 million, 23% higher than the corresponding quarter of 2024, mostly due to the gradual entering to production of our new capacity in the submarine cables factory in Corinth. In a sense, the cable segment showed a more than 30% increase in top line for the quarter, year on year, whereas steel pipes were at a much lower single-digit growth number. Then, operational profitability, adjusted EBITDA, reached 76 million, 39% higher year on year. If we allow for the one-off metal lag, this gives us an EBITDA of 78 million, and it is due to a favorable product mix for the cables, and for the steel pipe segment, they have achieved keeping last year's projects mix with the very good margins that you have observed in 2024. Our order backlog is stable, around 3.4 billion. So in a sense, what we earned and signed in Q1 more or less equaled what we executed in the first quarter. The prospects are very good for the rest of the year. I'll give you some more information on that later on. Our consolidated net profit rose to 41 million, 74% year-on-year growth, with earnings per share being at 19 cents. And of course, all of the above allow us to confirm our guidance for the full year 2025 for EBITDA between 300 and 330 million. So let's see together some numbers on the five financial figures that I mentioned before. Top line is higher by 23% year on year. 5 out of 6 insulation machines, what we call CCVs, in Fulgor factory are now fully operational. The 6th one will be also in full mode by the end of June, which means that the production capacity for the submarine cables is now double what it was at the end of 2023. The capacity expansion that started in 2023 was completed in the end of 2024, and now it is fully in operation. That higher sales of 23% translates into 40% increase in operational profitability to 76 million, with the margins jumping up by 177 basis points. This is due really to the product mix for CPW remaining as favorable as it was in 2024, and the increased production in the submarine cables facility contribute, of course, to higher margins for the whole cables segment. The EBITDA, so including one-off results like the metal price lag, the metal result, gives us a little bit higher EBITDA at 78 million, and it is mostly contributed, that change of the 34 million that you see there, from 54 to 78, it is contributed, of course, mostly to the cables segment, with EBT, earnings before tax, and earnings after tax following suit, since the financial charges that are affecting profits before tax have decreased due to lower interest rates. Working capital and net debt, although we do not give specific numbers, I would like to give you some flavor on those, are now normalized. You remember our December 24 numbers were very low due to the cash that we had received from our share capital increase in October. Now we are back towards the expected levels, both for steel pipes and cables. I remind you, a working capital steady state level is around 10 to 12% for steel pipes of revenue, for steel pipes, and below 8% for the cable segment, with the net debt expected to be at the end of the year around the level of 1 times EBITDA for the fiscal year, for the full financial year 2025. Now, for our backlog, the backlog is still around where it was in December 2024, meaning what new projects we gained in this first quarter equaled what projects were executed, more or less. Nevertheless, I would like here to point out a couple of crucial points, crucial observations that differentiate Cenergy and its two segments from competition. The first point here is that our backlog is diversified in two dimensions, both in geography. It's clear that most of the cables backlog is European-based. The US exposure is not significant, although we have been awarded a project that you see on your screen, the Silver Run project in the US, which is a 230 kV subsea export cable project. But it still occupies in our backlog less than 3%. So the geography is mostly European for the cables, and the geography of the backlog for steel pipes is really global. So we do not have a large exposure in one single country or even in one single continent, apart from the European exposure of cables. Secondly, the second dimension where we're also diversified is product diversification, application diversification, in a sense. What do I mean by that? I mean that the backlog of cables, which is around 3 billion for March, is really divided almost equally in 4 different applications. First, the land connections, approaching 25 to 26% of the backlog. Some subsea interconnections, so we're talking about interconnections that need submarine cables, another 30%. 30% is really related to offshore wind farms, and the rest are other land projects, meaning that we do not see our backlog be challenged by any slowdown in the renewables sector. Secondly, the second point I would like to stress here is that there is a large potential for further increase of our backlog in 2025. The interconnector market in Europe is very strong, so it gives us good prospects. Let me just mention that the expectations for an interconnection market, so we're not talking about submarine cables or offshore wind farms, we're talking about interconnection projects. The expectations and the estimates that most market players have for the years 2025 to 2027 are around 16,000 kilometers of cables. So this gives us a very good prospect for the 2 years ahead. Also, very strong prospect in Greece and the Mediterranean, both for TSOs, so transmission operators, and DNOs, distribution operators. And we also see that the tendering is very strong. So the expectation for 2025 for tendering activity in cables, I mean the whole market of the whole tendering market doesn't mean that it will be executed in 25. The tendering market in cables is close to 9 billion euros, and it is really centered around the UK, Scandinavia, and Germany. And at the same time, for CPW, there is a very good demand for natural gas networks in the US and Africa, and for CCS networks in Europe. So the strong commercial relations and the tier one position of CPW in the market gives it a very good prospect for strengthening its backlog even more. Now, what does that leave for the rest of the year? In cables, we see a strong offshore wind market in Europe, some slight slowdown in the short term, but as I said, the interconnection demand is very strong. This is really due to the notorious Spanish blackout, which showed the need of all European countries to enhance their international grids. So to be able to balance demand and supply of electricity, especially when this supply comes out of renewables, and the increase of the share of renewables in the electricity generation of the EU creates the paramount need, the crucial need, I would say, for strengthening grids between European countries. As our capacity now comes into operation, I talked about the new submarine capacity in Corinth that is already under operation. The new land capacity will also come into play by the end of this year in Thiva and Eleonas plants. So that gives us some good service for the offers that will come in the future and for those that we already have in our backlog. Furthermore, the US plant is on track. We have completed the coastal revetment. We have ordered long-term equipment for delivery in the end of 26. We have done some soil surcharging and the utility connections, and now we are selecting contractors and signing all supporting contracts. So the actual construction will start in H2 of this year. So that plant is going as expected, as planned, as designed. All of these factors makes us quite optimistic about the future. Of course, we are following closely all market developments, given the fluidity which exists right now in the international markets, not only in the energy market, but more generally in all international markets, commodity, financial, and so on. As for steel pipes, there is favorable demand right now for large diameter projects, especially linked to natural gas. CPW, as I said before, is very well positioned in this market and for this demand. There are new reserves of fuels, of hydrocarbons being explored and exploited in the US and the rest of the world, which means that gas will remain central to our strategy in the medium term. The CCS demand is very strong in the European Union. Our Porthos project is really evidence to the ability of CPW to execute a very challenging and sophisticated work. And I really urge you to watch the video from the installation and closure of the pipeline that was uploaded in our LinkedIn page and in my personal page in LinkedIn. It's really hard to believe your eyes that when you see that steel pipe, which is made, it's a pipeline made of steel pipes, 14 to 16 meters in length, coated first in polyethylene and then in concrete for the weight, since they are then laid down at the port of Rotterdam. The concrete weighting was actually executed in our new CWC facility in Thisvi. And you see that steel pipeline being bent and reeled like a cable in an S shape from a ship to the bottom of the Rotterdam port. the technology and the sophistication that the project that our engineers and our staff in Thisbe have achieved is really commendable, and I would like to thank all of my colleagues for such a great project. This, of course, opens very wide a door for more CCS projects like that in Europe. On the other hand, the hydrogen infrastructure in the European Union is slowing down. Timing and volume are still fluid, but that I mentioned that in my previous presentations with you, that the hydrogen market is a longer term event and not an event for the medium term. So we expect that to start being active at the end of this decade. All of the above gives us a very positive market outlook for steel pipes, and so we are confident about both 25 and 26. The backlog of CPW allows us to have a visibility of a year and a half. We again remain cautious on the repercussions and the indirect effects that the geopolitical environment might have on our figures, but it's clearly a very good year, at least for 25 and for the years to come. All of the above, of course, make us quite confident in confirming our guidance for EBITDA for 2025 between 300 and 330 million euros. I close this short presentation with our financial calendar. First, around the end of June, there are the dates related to the dividend distribution of 14 cents per share. This was actually approved yesterday by the Assembly General of Cenergy Holdings. And then in mid-September, we will have our H1 results. This concludes my short presentation. I now turn to our operator to guide you through the Q&A session. Thank you.